And meanwhile, the group of managing director of NNPC Limited, Mele Kyari, says the oil company is the driver for Nigeria's economic growth as it positions itself to resolve issues around energy poverty. Mr. Kyari made this known at the 38th Founders Day and 30th Convocation Ceremony of Federal University of Technology, MENA. To take a listen.
Energy is everything. That you cannot have prosperity, you cannot have economic development except you have energy. So it's not possible. Therefore, this company is the only vehicle today we have that can help us get to the position of economic development and prosperity. As we speak today, there's abject energy poverty. And of course, over 50% of our population do not have access to energy. But this can change because we have enormous resources, particularly gas resources, that we can deliver into our country and through the infrastructures that we are trying to build, so that ultimately in another 3 to 4 years, that this country will not be in the situation of energy poverty while recognizing there are issues around energy transition that are going on.
Right, now for Commodities Market Update, we have joined us Dumebi Iyeke, Research Analyst, Financial Derivatives Company. Great to have you, Dumebi.
Good morning.
Good morning.
Thanks for having me.
Yeah, so we see the world's powerful oil producers, agreed to a further planned increase, about 400,000 barrels. What do you think about this move?
It was really expected generally.
Yeah.
The markets didn't think that OPEC was going to do anything different. Right now, oil producers are enjoying the high oil prices, and so the expectation was that OPEC was just going to, continue to stick to that. Although there was some level of expectation that, due to the calls from US and India and major other European countries that are experiencing energy-induced inflationary pressures, that OPEC would actually, probably make some level of difference to increase, oil supply more than what is currently doing. But the cartel is still very conservative in the sense that they just want to keep oil prices where they are, keep them bullish, and that's because there are still some level of uncertainty regarding energy demand, and that's because with everything that's happening now, there's still demand looks quite unstable. It's looking like it's going to be strong, but there are also possibilities that it might taper, and or especially the fact that the US is planning to increase rates, the Bank of England as well. So there's a lot of things happening within the global economic space that OPEC is putting into consideration and saying, let's just maintain what we're doing right now and see how the markets continue to react to it.
And we're seeing, markets, having kind of pullbacks, today. And the ECB, Bank of England, meeting today. But, with this additional supply, won't it, taper this oil upward movement of the price?
I mean, if we follow the trend of the gradual increase of OPEC, we haven't seen that much of any tapering in oil prices since this 400,000 barrels per day gradual increase. So it's just basically fingers crossed, because the expectation is that oil prices would probably remain at where they currently are, and even if there will be any decline, it might not be so significant that the markets would really react negatively. So and there are other factors affecting oil prices right now, not just the gradual increase in oil supply from OPEC. Supply from other OPEC supply from other oil producing countries are not exactly on the high side as well. There's still limited global supply. There's the Ukraine-Russia tension that's currently affecting, oil prices right now. And not just oil prices, natural gas prices as well. And then there is the expectation of the US Fed increasing rates. That as well is having some impact on the global commodity space, not only oil right now, other commodities as well. So all of those factors put together with OPEC now just increasing oil supply the way it has currently been doing so, what is going to continue to keep oil prices the way they currently are.
Okay, and talking about, production now, we see Nigeria was able to pump about 1.46 million barrels per day, lower than the expected 1.683 million. And we also have the issue with oil theft in the country, about 50,000 barrels per day lost to thieves. Quite interesting.
So for a few months now, Nigeria keeps underperforming its OPEC quota, and that's because of this oil theft, vandalism, and all. And this issue has actually been in place for a very long time. The difference now is that we're now at a position where we need more oil than ever. So the news about it is becoming more everyone now is beginning to peek into that particular issue, because there are other factors affecting Nigeria's oil production. There are operational challenges. There are cost-induced challenges as well. So, but right now, this is a major problem that, if not addressed, will continue to affect Nigeria's oil production. And the main reason why this is very important is because changes to Nigeria's oil production is very, very significant. Nigeria is more sensitive to changes in production than price. So even if prices are higher and the expectation is that it would support government revenue, it wouldn't do as much as, when oil prices are higher, because that is where the export revenue really comes from.
Right, and we've seen the external buffers continue that trend downward.
Exactly, and that's most likely because right now we're seeing that the CBN is trying to intensify its efforts to keep the Naira stable and keep intervening in the forex market. So and with the shortfall in revenue, the next best option is the external reserves. We've seen the drawdown in reserves over the month, especially in January, even though the intervention is still, very low compared to what it was in December. I mean, it's about 40% lower than what it was in December. We're seeing that on a daily basis, this is what is happening. And if you notice, the IFX rate has maintained a band of 415 to 416. The parallel market rate as well, 569, 570. So even if we're still seeing some little swings, we're seeing that the increase in, forex supply to the official window is satisfying some level of demand and keeping pressures, subdued to an extent.
Quite interesting. But how are we doing with natural gas? See, the prices are up.
Yeah, exactly. Natural gas is still, a major contributing factor to Nigeria's export earning. It's a huge factor, or a huge commodity for Nigeria. And with the global prices higher right now, due to this same Russia, Ukraine tensions. Russia and Ukraine are major, gas supplying countries. So with this happening and natural gas prices remaining high, it would continue to affect Nigeria. And that's because even though we export LNG, we still import. Nigeria is still a net importer of LNG. And not just, and not just LNG, the other refined products from LNG like LPG and all. That's why we're seeing the price of cooking gas, still high, because we're not only importing, but we're now importing at a higher price.
The same story.
Exactly. So if the price of natural gas continues to increase, we're going to continue to see that domestic impact. And remember that right now, there's a lot of countries in Europe and the US. There is currently is experiencing cold weather right now. So that as well is increasing demand for heating and supporting natural gas prices.
Quite interesting. But another issue, I see our currency in circulation is up about 17% to about 3.3 trillion naira in December 2021. So that's a lot of money, a lot of naira in circulation right now. How does that impact commodity space?
So the thing is, this has an inflationary impact. And when there's too much money in circulation, it will fuel inflation. And not only that, but also decrease the value of the country's currency. And we can clearly see that, happening. So, yes, we can clearly see that happening with inflation and, the value of the Naira. But where this becomes very interesting is that, normally when economic activities are booming, when you see an increase in manufacturing activities, you see an increase in demand levels, increase in consumption, you have some level of data to support why currency in circulation is increasing. But in this case, business operations are not as high, manufacturing activities are not as high, agri sector activities are not as high, consumption is not as high.
So what's driving it?
So that's the irony. So within the Nigerian context, what exactly is driving this sharp increase of currency in circulation? And the next thing we can look at is ways and means. So there's probably an increase in printing of money, or government borrowing from the CBN, and that is having some impact in the currency in circulation. Because if you even look at the e-payment channels as well, people are not exactly spending money cash. There's an increase in the value of transactions within the e-payment channels. So even if the corporate world is maintaining this, even if the corporate world is spending, it's not spending cash and all of those things, we're looking at it and wondering why that we're having too much money chasing too few goods with low demand and low economic activities.
Quite an interesting.
Yeah, so that's where the paradox comes in, and you're wondering, why. But the only the next best option to look at is an increase in government spending. And that's
with
probably
CBN
fueling. Maybe not the CBN interventions, but there is the CBN intervening. There is a pool, or there's a pool for that. So the CBN is putting money in the forex market, and we have businesses buying that forex. So there is a channel of that, and we can see that happening, and we can explain that with what is happening with the exchange rate. But when it comes to currency in circulation, you're looking at the value of your Naira within your own economy. That's how much of your money is being spent, and people are not spending as much. Even if they are spending as much, not cash-wise, because and we can see the fact that inflation is high, the value of the currency is depreciating. So even if that was happening, even if we're seeing an increase in currency in circulation, and on the demand side, there should be some level of explanation for it. And a lot of times, the explanation is that business activities are increasing. So even if that is happening, we know that, okay, with some policies put in place, we can check inflation, we can check exchange rate depreciation, because what is happening right now is good for the economy.
The question now is, how do you actually check this?
Check currency in circulation.
Right now.
That's what I'm saying. So it's from what is looking, that's why I mentioned the irony. So from what it is right now, it's for us to check government expenditure.
Right.
Yeah, or government borrowing, basically, ways and means, basically to check that, because that also has its own ripple effect on, the economy as well.
Quite interesting. All right, what's going on with the domestic commodities right now?
Basically, still the same, dynamics playing out. Commodity prices are still high, although we haven't seen so much increase because demand is not exactly as high as it would be. But I mean, January is typically a slow month. People are just recuperating from the festive period, and some people still have that bag of rice at home. They still have some tubers of yam at home from December period. So it's from now that would from February that we'll begin to see a pickup in demand levels, a pickup in business activities, and all, and we could see an increase in demand for commodities. But the issues concerning issues affecting commodity prices, like supply chain disruptions, increase in cost-reflective tariffs, the exchange rate pass-through effect to commodity prices, the lingering forex restrictions to commodity imports. All of those things we'll still see them play out in commodity prices, and that could keep prices elevated in the near term.
Quite interesting. What about the global commodities?
Global commodity space, definitely we're seeing a lot of activities there. And right now, the Russia-Ukraine tensions are currently affecting both the energy market and the grain markets, because they are significant players in both of these markets. So for commodities that Nigeria imports, like sugar, corn, wheat, we're going to have a ripple effect on the domestic economy for that, because the government's import bill on those commodities will increase. But for commodities like cocoa, that we're still seeing an increase in prices, Nigeria will benefit from higher global commodity prices in that area. Same as well for LNG and oil.
All right, looking at the equities market now, we saw a pullback yesterday. How are you seeing it?
Generally, from the beginning of the year, several analysts were looking at this as just somewhat of a temporal rally, and that's because of the dynamics that we're looking at for the year, and that from the low interest rates. So that as well, is fueling some level of rally in the stock market. We're seeing an increase in investments in particular stocks. So that as well is supporting the rally. The release of corporate earnings reports, that as well is affecting the rally rally. But from what we saw yesterday, the clearly, was seeing some impact of the fact that the global economy is going to start increasing interest rates soon, and the Nigerian economy or emerging markets generally will no longer be as attractive to investors, and the expectation is that they will begin to pull out funds, to garner additional yields from these advanced economies. And the U.S. Fed is planning to increase rates from March, and we're in February already, so they expect investors are already having itchy fingers as well. So that's happening.
Expectations for the Bank of England and ECB today. All right, thank you so much, Jumebi Eki, research analyst, financial derivatives company. Always great to have you.
Thank you so much.
All right, we'll take a moment now.